If you are new to the channel, make sure to hit the like button and subscribe for more deep dive investment analysis. Because today, we are exploring Royal Bank of Canada, ticker symbol RY, and its impressive third quarter performance in 2025. RBC is Canada's largest bank, a global financial services leader serving over 20 million clients across multiple sectors, including personal and commercial banking, wealth management, insurance, capital markets, and asset servicing. In this analysis, we will walk through what drove its record Q3 results, evaluate its financial health, competitive positioning, strategic initiatives, risks, and what this could mean for investors looking for resilience and growth in a global bank. Royal Bank delivered a stellar third quarter, with adjusted net income of over 5 billion Canadian dollars, topping previous expectations. This marks a 36% increase compared to the prior year, showing robust year-over-year earnings growth and a return of confidence in its diversified business mix. Adjusted diluted earnings per share came in at around $3.84, up from $3.26 a year earlier, significantly outperforming analyst projections. Revenue for the quarter rose to approximately $17 billion, beating forecasts and reflecting broad-based demand across the bank's platforms. Driving this quarterly growth was especially strength in wealth management and capital markets. The wealth division saw net income climb by 15%, benefiting from lifted equity markets and increased fee income as clients sought guidance amid trade tensions and economic uncertainty. Equally notable, capital markets delivered a 13% jump in net income to about $1.3 billion, with overall capital markets revenue up 25%. That surge was powered by increased fixed income and equity trading, where fixed income revenue rose 35% and equities gained 43%. Investment banking also gained momentum, with deal volume pushing fees 11% higher and RBC raising its leadership aspirations in the space. Credit costs also came in below expectations, an important signal of quality. Loan loss provisions were around $881 million, well under the forecasted $1.07 billion. That provision release largely stemmed from improvements in the US automotive loan portfolio, particularly within City National, RBC's US wealth banking subsidiary. Combined with strong performance in trading and fees, this allowed for exceptional bottom-line growth. Looking under the hood, the results illustrate the power of RBC's diversified business model. Personal banking income rose significantly too, led by net interest income and growth in deposit volumes. The insurance business posted strong gains, with net income up 45% year over year, reflecting better investment income and disciplined underwriting. Across the board, RBC's operating leverage remains healthy. The bank reported an operating leverage metric near 9% and an adjusted efficiency ratio in the mid-50 percentile, highlighting disciplined cost control even as volumes rose. RBC's financial strength remains a standout. The bank maintained a solid Common Equity Tier 1 ratio, well above regulatory minimums, ensuring capital is abundant even as sizable shareholder returns are deployed. Indeed, the bank returned an estimated $3 billion amount to investors through dividends and share repurchases during the quarter. Credit quality also held firm, with provisions for credit losses remaining well managed and impaired loans trending lower, indicating RBC continues to shed risk even in markets that remain uncertain. Turning to strategic execution, RBC remains committed to its One RBC framework, an integrated strategy connecting businesses across geographies and segments. Digital transformation continues to pay off, with over 10 million active digital users and nearly 200 million sessions logged in Q3 alone, underscoring technology's role in client retention and operational efficiency. US operations continue to be one of the fastest growing parts of the bank. Net income in the US was up around 21% year over year, bolstered by previous acquisitions and operational synergy. Despite these strong tailwinds, risks remain. Economic volatility or a sudden downturn could pressure trading activity, slowing wealth flows and investment banking momentum. Credit risk remains, especially if consumer or commercial borrowers underperform. Regulatory developments in both Canada and the US could impose costs or slow expansion. Finally, interest rate shifts or market corrections could impact RBC's net interest income and trading volume. Looking ahead, a base case scenario sees RBC continue to deliver mid to high single-digit revenue growth, steady earnings per share gains, and maintain its dividend while pursuing moderate buybacks. A bullish outlook could unfold if capital markets remain active, wealth flows stay strong, and US operations continue outpacing expectations, potentially delivering double-digit returns on equity and opening room for further capital return. In a more cautious or downside scenario, prolonged economic slowdown or market volatility could compress margins and slow growth. But RBC's capital and diversified model would likely buffer the impact. At the end of the day, RBC's Q3 2025 report is not just a number beat. It is proof of strategic resilience, operational discipline, and the strength of balance sheet. For long-term investors seeking a high-quality bank with stable dividends, global reach, and diversified growth channels, RBC stands out as a compelling blue-chip opportunity. It may not sport explosive growth like some high-beta sectors, but for stability, income, and strategic growth in uncertain times, it represents a core holding with upside potential. Thank you for watching this in-depth look at Royal Bank of Canada's third quarter 2025 performance. If you found this helpful, please like and subscribe for more long-format stock analysis every week.